The Forex markets are dead right now. We are trend traders. We need volume, and there's just no volume. We are now at a bit of a crossroads. We can either take the time to take advantage of this dead market, or we can do what most trend traders do and give all our money back that we made back when the market was trending. There is a right way and a wrong way to handle these types of markets. And the wrong way looks like that. I'm actually kind of glad these markets happened when they did. I moved this video up a little bit, but this is a great situational video. This is what really separates traders that are able to win consistently all the time, and then the traders that always have a really hard time when markets don't favor their exact conditions. I will say this too, this video is not for new traders. This video is for my community, people who are trading the no-nonsense Forex way, people who have already put the time in and are testing their systems in particular. But one of the many reasons that I love trading Forex so much over any other type of market is because you're never, ever helpless, even when it seems like you might be. If you trade stocks, you're always helpless to a bunch of fundamentals and a bunch of things you can really never control. Crypto, there's all these different sorts of things that come about that, again, you have no control over. But with Forex, you really have as much control as a trader possibly can, even when things are not going our way. But this only applies if you know what to do. So in this video, first off, we're going to learn how to recognize dead markets. I think it's pretty obvious, but some of you might not quite know how to best go about this, so we're going to do that here. Also, there are ways we can actually take advantage of this. Not so much from a money standpoint, but from a long-term securing our own future standpoint. And this is really important. And then we're actually going to put a plan of action in place. There are different steps that you take now compared to the steps that you normally take. And we need to go over these. This is a great plan that we're going to put in place, and you can always come back to this video when you find the markets dying out, because that's what they are doing right now. And if you remember the tool I gave you in the volume volatility video, it was this thing right here. You go to barchart.com. You type this in, it pops right up. For those of you who don't remember it or didn't see the video, I'm going to go ahead and put it down below. But it's a great tool to show traders like us if there's enough volume to trade from a very macro view. So let's go ahead and take a look at it now. And here we are. So if you haven't seen this or if you forgot, it's called the Euro FX VIX. Now, just because it says Euro doesn't mean it's not for the entire market. I found it to do a very good job of showing us how much volume overall is in the entire Forex market across the 8 major pairs. So don't let names get in your way here. But if we go down a bit, you can see my baseline used to be 8. Nowadays, I might just have to lower it. This has gotten out of hand in terms of low volume. You see almost half, if not more, of the days closed. Don't pay so much attention to all the nonsense that happened during the day. Pay attention to the close. Where did the volume close at the end of the day? And over half the time, it's been under that 8. But now, things are getting really crazy because you see this 6 line down here. Usually if volume ever came down close to it, it typically bounced right back up. But now, for the first time in a while, you can see right here, maybe not on a phone, you might have to enlarge it, but the last week or so has just kind of stayed right at that bottom floor. Unusual. You don't see this too often, but when you do, you can deduce that we are in a pretty dead market, and a completely different protocol has to be used. So here we are at the S&P 500. Now, what we typically do not want as Forex traders is for the market to just tick up, 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 up like this, like a roller coaster right before it starts to actually go. This has never historically been good for Forex traders. We want a sharper move up or a sharper move down. This whole tick, 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 tick thing is not it. And then once it finally flattens out to see what we're actually going to do, you know, either it's going to go way up here, way down here. I don't care which way it goes. Just go. Stop this right here, because this right here is what makes markets really, really slow. This is where dead markets occur. When things typically move, especially down, then people take their money out of the market and into markets like ours, which is great. That's where our real volume comes from. But on a very long-term scale, if I were to zoom out of this chart and show you the last 3-4 years, the entire market was kind of going tick, 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 tick straight up like this. And that's the reason why the markets, especially for the last 3-4 years, just haven't quite been what they were back in 2012, 2013, when we were making 300-400 pips a day in some cases. The volume just has not been there, but we are fluid and we can adjust to this. And I'm going to show you how soon. But also, if you look at like the euro dollar, for example, the most commonly traded currency pair out there, look what's happened on the ATR. I mean, it was going just fine. And even this is not a whole lot of volume for the euro dollar. But still, we're making decent money with it being there, and then just boom, right off a cliff. So needless to say, volume has certainly dried up. And that sucks. We're trend traders. We need volume to make trends do what they do. It is very easy to get restless in times like this. But anytime you run into situations like this that do not favor us, there's no volume, I'm not getting any signals, the signals I do get are losing, just remember what our old pal Jocko Willink would say in a situation like this. Things aren't going your way? Good. What do I mean by this? A dead market like this is the perfect time to do a lot of things that are going to cement your legacy for the future. Take advantage of times like this. Because for one, you're just going to have to understand that this happens sometimes. So when it happens again, you're not going to be so caught off guard. This is part of Forex trading. It's basic chaos theory. You have order, which we're in right now, into chaos, which is a trending market, right back into order again, which is going to happen again. This will not be the last time you ever see this. But what you can also realize is if you're testing your system out right now for the first time and you just ran into this crazy low volume market, it's normal. It happens. Your system is not the problem here. You see all the people on my YouTube comments saying how awesome this has been and how many pips they're gaining right away, and you're not getting those. It's not necessarily your system. You just ran into a dead market to start off the game. It will come back. But for all of you, this is a perfect time to test your system. Most of you, if you are doing this correctly, should be demo trading right now. So you don't have that much to lose. See how much your system is actually losing during times like this, and do what you can to adjust your system so you lose as little as possible. Because this market could end after non-farm payrolls comes out in a couple days, or it could just keep going for a while. We don't know how long this is going to be. And the worst thing you can have during this time is a system that keeps losing you money. So put that sucker to the test. And above anything, this is a great time to see if you have a good volume indicator. I know for many of you, that's the toughest part of this entire system. A good volume indicator right now should be keeping you out of just about every currency pair out there. If it's not, and it's telling you to take a bunch of trades, your volume indicator probably sucks and needs to be either replaced or tweaked heavily. Because if it's not keeping you out of trades right now, when is it keeping you out of trades? Traders, forward test these things. Forward test them now. It's the perfect time. I don't know the next time we're going to see a dead market like this. It took a while to get this low. So take full advantage of the time we have and measure your system up against it. If it fails, that's fine. This is the time you can adjust it so it won't fail again. I don't think a lot of you realize the opportunity we have right now, especially from a testing standpoint. Some trend traders are out there boo-hooing about the lack of volume. Others are taking this time to fortify and strengthen the systems they already have. So pick a side. But once you have done that, we need to now figure out how are we going to attack this market. We, as trend traders, we are pretty much at war with a market that does not allow us to trend trade. We must be fluid. We must adjust to different conditions out on the battlefield. And this is how we're going to do that. All right, so listen up. Above anything, this is totally okay. If you have the patience, and I hope you do, you can just not trade. Keep that Euro VIX on hand, and if it's still piddling around near the 6 line or going even lower, nothing is in your favor right now as a trend trader at all. So simply not trading could easily be the best thing you could ever do. I was actually a winning sports bettor at one time, and the only reason I was is because I stopped betting all of the sports that I sucked at. And trust me, this took a lot of the fun out of watching those sports. It took a lot of discipline not to have action on baseball and basketball and things like that. But when I just stuck to what I was good at, when I only put my money down when conditions were favorable, that's how I won. And you can win long-term in Forex by constantly getting the best of it. And getting the best of it means not trading when you're getting the worst of it. So when markets like this happen, if you just want to sit this one out and reevaluate your system and test out some new indicators or take a vacation, this is the time to do it. This is my number one suggestion when markets like this come around. Now, your system still may be giving you some signals. That doesn't mean you should completely just not take them. There sometimes can be a little bit of money to be made here. You can get a bunch of small wins. And like I mentioned before, those small wins are what cancel your losses in the future. So you definitely want those. But here are the best way to get those. First off, even if you're getting signals on the United States dollar, I would just avoid it altogether. Even though I trade the dollar, I have pointed this out before, you have more working against you here than you do anywhere else when it comes to news events, when it comes to where the big banks like to go in and manipulate price. You factor these things in with really low sustained volume, you have a pretty bad situation. And it's a situation you are better off avoiding. I would just stick to cross pairs here. And when you do trade them, here is a big adjustment that I want you to make that completely deviates from what you were doing before. Once a winning trade has hit your first profit target, I want you to take the whole thing off. There's really no reason to only take half off and hope the rest of the trade trends when pretty much nothing is trending right now. When you're not getting any follow-through, just take the wins wherever you can get them. Does that make sense? These 200, 300, 500 pip moves don't really happen when there's no volume to propel them that far. So why bother trying to get them? Take the wins where you can get them. Now, don't get comfortable doing this. Overall, in most normal situations, this is not really good money management. This is a 1-to-1 ratio. It's terrible money management. But this is one of the biggest adjustments you are going to have to make in dead markets. And then once you're doing this, again, it's chaos theory. Chaos is going to come. But realize, because volume indicators are just the way they are, once it finally breaks out and makes that first big move, you're probably going to miss it. And this is going to suck because you probably had other pieces of your algorithm telling you to trade, but your volume indicator probably won't catch up, and that is okay. That is normal. There are very few indicators out there that are going to catch up to a move that just pops up out of nowhere like that. But honestly, sometimes that first move out of a really, really tight range is a false breakout anyway. So above anything, just have the patience and smile knowing that you survived a point in time in the market where most trend traders would have gotten murdered. We win by not losing. And there was a lot of losing going on for trend traders during these dead markets because they don't have a battle plan like this in place. And now you do. Now there's one other thing that I can mention here. And I really, really don't want to. But let's say life has taken a turn for the worse and you need to make money right now, or you lose rent, or you go hungry. First off, don't ever let yourself get in those situations. But if for some reason you have, and you need to trade your way out of this situation. This happened to me back in 2014. The worst dead market I've ever seen was the summer of 2014. You can go back and look at it. And during this time, on the Euro FX fix, that tool we just used, price actually went all the way down to 5 and actually hovered there for a little bit, I think back in July 2014. Deadest market I've ever seen, and that whole summer it didn't really get a whole lot better, and I had just started trading with the prop firm that I'm with right now. I don't remember if I was actually an active trader or I was auditioning for it. I can't recall exactly where I was in the journey there. But as soon as I started, the market reached the lowest levels of volume that I had ever experienced. And I'm being expected to trade. And my entire system is telling me not to. So there's one way to really combat this. And I'm going to go ahead and tell you what that is, as much as it pains me to do it, in the blog. Go look at the blog. We haven't done a blog teaser in a while, but I always tell you in the blog I put some things in there that I don't say on the video. I'm going to leave that one part out and make you go look at it. But over at nononsenseforex.com/blog, we miss you. Please come back if you haven't looked at the blog in a while. You're going to want to know what that one thing is, because it's one of the most anti-VP things you're ever going to find. So go there. But apart from that, you have what you need to survive markets like this. And that's really, really good. And you can always refer back to this video if it happens again. And we will be having more situational videos like this in the future. And you are going to want to see them, because they might not be the most exciting videos in the world, but they are some of the most essential videos on this entire channel. So subscribe, hit the bell. Don't miss any of them. Videos like this are really important, especially because we are in a dead market. You need to know what to do right now. And if you weren't privy to videos like this, you would have never seen it, and you could have easily lost a lot of money, because you can lose a lot of money. Because we win by not losing, and there's a lot of losing out there, traders. We are at war with a market that is completely anti-conducive to the way we trade. Do not let it beat you. We will overcome this, and we will come out ahead in the end. We always do. Go get it.